Carvana stock is up more than 1,000% year to date. The company that sells and buys used cars online is looking like a GameStop version 2, with a short percentage of shares outstanding close to 40%. And they just announced Q2 earnings, and this shit is juicy. While the company boasts about a higher gross profit per unit, they are still losing on average 3.5% on all revenue that they're generating. The funniest part is this adjusted EBITDA, where essentially they're turning a negative number into a positive, which is essentially taking their net loss and actually adding back all the expenses that they pay related to debt, which is $155 million. They're essentially saying, ignore that. So the company has a negative operating income in the hundreds of millions. They lose hundreds of millions in interest payments. They are already loaded with debt with $6.3 billion. From an operations standpoint, they lose cash, and the only reason the cash on their balance sheet isn't going down is because they continue to take out debt. Essentially, you have a company, the more they make in revenue, the more money they lose. But that doesn't mean the stock can't continue to skyrocket as shorts get absolutely torched. But in the long term, I don't see how this company can turn around. They have too much debt. They lose a lot of money on the revenue that they're generating. Their margins are very tiny. It's just a tough business model that this company runs. So I'm not shorting it, but there's no way I'd buy it.